The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, midweek Wednesday saw the cattle complex continue its rocket ship to the upside. Another strong day in futures. The immense volatility here continuing, with it being all to the upside so far this week. Grains and oilseeds also mostly in the green on the day Wednesday. We have plenty to talk about. Joining us now for a conversation, Mike Zuzolo with Global Commodity Analytics. Mike, good to talk with you again and look at this trade action. And, you know, we have a lot to talk about, but I want to start with this cattle complex, something different for you and I in our conversation, because that continues to be the story, I think, of the week. Just a sharply higher day again in feeders, fats taking in that as well. I mean, the immense volatility in cattle just continues here, Mike.
It has, and this is another move that is a sharply higher move, what we would call a parabolic move to the upside. And those traditionally, especially in the agriculture commodities, Jesse, are kind of indicative or show us maybe that the trade mindset is they feel like there's fresh news out there, that we don't have enough supply to meet the demand. And so by that sharp higher up move that we saw on Wednesday, and we saw a nice move on Tuesday as well as Monday, but the fat cattle didn't join up with the feeders until Wednesday. But with both of them moving sharply higher on Wednesday, it would suggest to me we got fresh bullish news to feed the bull, make the market more concerned about too little supply meeting the demand that we have. And I think that comes through fresh news coming out of Central America. A lot of Central American press has been out there the last 4 or 5 days, probably as a result of the press conference in Texas with the governor of Texas and the USDA Ag Secretary late last week. They're probably waking up in the Central American press more to what's happening. And what we're hearing now is that Mexican cattle ranchers want to shut down their border to the south because of the illegal amount of fat cattle, or feeder cattle, I should say, coming into their market, and that creating more headwinds for them to be able to get the U.S. border opened up. And so this just opens a whole nother level of when will the U.S. border be able to be opened up with Mexico? Are we going to, this is what I'm asking as a livestock analyst, are we going to have to rely almost completely upon the sterile flies to get the job done, which is months and months and months away? Some of the numbers I've heard so far, just to put it into context right now and to give us kind of a measuring stick, and we'll look at it again in a few weeks to see where the numbers are. But I'm hearing Mexico right now has lost about 1.3 billion US dollars. That ends up being about 650,000 head. Another piece of the context is, well, how many head of feeders or stockers or whatever they are coming from Nicaragua, El Salvador, those border states that Mexico once shut down, the Mexican cattle rancher once shut down. And I'm hearing 800,000 head. And I'm also hearing that because of this illegal movement of up to 800,000 head at this stage, it's costing producers 25% more, along with extra vigilance and watching for and monitoring their herds, another 25% more on the cost of production for their cattle. And so it's literally getting to the point where I think that we're close to losing some Mexican cattle producers, especially smaller and medium ranchers. And I think that's where the news headlines are kind of leading me. And I'm sure, or pretty sure, that the rest of the livestock industry in the United States is probably thinking what I'm thinking right now. But the big headline takeaway for Wednesday is if you've got problems farther south in Mexico, and Mexico wants their border shut, that just makes it even a longer period of time before the U.S.-Mexico border opens back up again. Does this get converted into packing plants? Do we see Mexico build packing plants to try and kill the fat cattle down there because they're buying a lot of corn right now? These are all questions. We don't have answers yet.
Well, I think all those headlines that you brought up and all that news is really kind of, to your point, fueling some of this rally and some of this parabolic move in the cattle. And so maybe let's look at this from a technical perspective a little bit here and pull up the first chart you sent me, and just, maybe a good definition of some of the technicals here and a good refresher might be a spot for us to start here to talk about, Mike.
Yeah, and this is something that I originally had drawn up for you or pulled off for you from John Murphy's book on technical analysis for the soybeans, and we'll look at a specific example in the November beans, but this works very well with what happened in the cattle. I'm so glad you introduced it into our livestock discussion, but this is essentially what we're talking about, where you have a sharp move up. Say that was, about a month and a half ago. You consolidated, waited for fresh bullish news, and as soon as you broke through the technical resistance levels, you can start measuring another swing objective, is what it's called, another leg higher in prices. And so we are, I think, in cattle and soybeans, and to a lesser degree, wheat and corn, and most agriculture commodities right now, really playing a heavy game of technical analysis as far as price discovery. I had Wall Street Journal called me on Wednesday, and they said, where's the top? When's the next, how do you define how high we can go? And I told them very frankly, I said, it's really going to be based upon the next swing objective in technicals and momentum factors and sentiment factors. It's not going to be based upon too many fundamentals unless we get some hard data from the USDA Ag Secretary that says, we've got a timeline that we think that we're going to be able to open this border. That would be probably a shock to the downside in the price, but you can get an idea of what we're talking about with this parabolic move up. Again, the goal of this in agriculture commodities is to cut the demand off at the knees. And when you see Big Macs $1 and then you get a free one, a second one free, and one of your colleagues, Susan Littlefield, told me yesterday about a Perkins deal where it's a $99 or $9.99 hamburger, pie, and French fry deal, all as a combo at a sit-down restaurant that's known for breakfast. We're not rationing demand, and I think the trade knows that. We're not rationing it fast enough, and that's the fear that the market has right now.
And I think you can see some of these parabolic moves on the charts. Let's look at the August feeder chart here for starters. And I mean, you see that steady, sharp gradient going to the upside here. I mean, talk about this for us, Mike.
Yeah, and this is where I really do like the price channels right now in the feeders and in the fats because they've been in play ever since the lows back in late June, early July. And I usually, my rule of thumb with technical analysis is, does it make sense with the fundamentals? And if it's not broke, don't try and fix it. And so this has been a very good chart, very good piece of analysis to keep in mind with the technicals. And so this went down 5-6 days ago. Check the channel support. The channel support was checked twice in 2 days, just confirmed to the market that, hey, this is still a valid channel. And so I think we're heading towards, probably looking towards that 360 area would be the top end of the channel. That would also fulfill kind of a swing objective in these August feeders. If you go back and look at the August 7th low of around the August 1st low of around 330, Jesse, and then we went 6 days later, we were at 349. So like you said, almost $20 higher in 6 days. That I would define as a parabolic move. That move is about $19 up. If you add that to the August 15th low of about 339, that gets you to 358. So I got a couple different technical indicators that would say 359, 358 to 360 really likely as far as how the technicals look. Now, do the fundamentals support that or not? And to your point, the major support line all the way back down at 320. What this means to the guys and gals that I work with in the cattle industry right now, the ranchers, especially the stockers who have these unbelievably priced heifers right now and not the best back end fat cattle prices, the deferred cattle market. It's getting better, but it's not where it needs to be yet. Do you do you retain the heifer, or do you just go ahead and let it go and sell it into the red hot market? And that's where you could go all the way back down to 320. You could literally take almost $40 off the price of feeders and still be in an uptrend technically.
How about over as we take a look here at the cattle and the boxed beef, the live cattle futures and the boxed beef? And, I noticed boxed beef a little mixed at midweek, but still that's been a very strong market to look at here, Mike.
It has. And I think this is a domino effect market right now, Jesse. And so to the idea that the fundamentals need to support the technicals, in my mind, it goes to, okay, did this Mexican news, which supercharged the feeders and got the fats moving on Wednesday. Was that in part due to the Packers coming off the sidelines and doing business because they saw the same news and thought, I'm not going to get my seasonal correction. I'm not going to get a pullback here towards the end of summer at this stage like I was hoping, or towards the end of the month. That's what we want to watch for by the end of this week. I've heard some businesses being done on Wednesday. Don't know the numbers, but it sounds like Texas is at 245 again. And so we want to watch that negotiated cash steer price, because we could actually be seeing a reactionary move by the Packers because of this move in the futures, because of the Mexico news. And then that would feed upon itself. If the cash market went higher to the end of the week, that would probably also supply fresh information or news to be able to keep the fat cattle moving up with the feeders. I think when I got done today and got on the air with you and started taping this, the lead month feeders against the lead month fats, which is still August, I think it gotten close to $1.20 premium in terms of feeders over fats. So it is a point now where if the feeders keep going higher, that spread being so stretched would suggest fats should keep up pretty nicely from here on out.
We're talking with Mike Zuzolo from Global Commodity Analytics here today on Market Talk. Mike, let's go over to the grains and oil seeds. Let's start with wheat. I know we set new contract lows Tuesday. Nice to see a bit of a key reversal, at least in Chicago futures on the day Wednesday. What are you tracking as you're following along with this wheat complex?
It's a fairly clean market analytically, Jesse. What I said in my weekend newsletter to clients and subscribers was we had a higher week like August of last year after a WASDE report came out that was what I would call price negative or bearish. We still closed higher in soybeans. Corn could not, wheat could not. Corn might have just a little bit on the final, now that I think about it. But the key point is that the soybeans led us higher like last year at this time. Now can we close out a second week higher in light of the Pro Farmer Crop Tour data, the Northern Hemisphere crop weather, especially the U.S. crop weather, and some of the macro commodity issues like the Federal Reserve minutes and the U.S., Russia, Ukraine peace negotiations. And what we see, and you brought it up, what you see here in this weekly wheat chart is we got within a penny of getting down to the August of 2024 lows on the overnight Globex trade early Wednesday morning. So 493.5 was our low last year. I show 494.5 as the low on Wednesday, including Globex. We bounced, and then all of a sudden we went positive in the week before the close, and we pulled it back and dialed it back on the close on Wednesday. But this weekly chart was showing a green bar late in Wednesday session. That would give us the ability to stop this bleeding. Look at this. We're at 5 weeks straight in a downtrend in terms of weekly lower close. So wheat as our long-term leader, soybeans as our short-term leader. Can the wheat come in here and provide support? Not only close higher, because we did make a new weekly high, not only close higher, but can we get into above that orange downtrend resistance line, breaking through that 5 straight weeks of downtrend, and then actually start to move towards that breakdown in the pennant, in the wedge, back around that 540, 542 level. What's doing this? Again, what's the fundamentals that's helping the technicals maybe do this? It really goes back to the Black Sea. A lot more questions now, more in line with what you and I have talked about here in the last few weeks. What is the Russian wheat crop look like? How much of it is Ukrainian wheat and corn that they're counting? Because simply put, France has been selling wheat to Egypt and to Tunisia, and it's wheat harvest in Russia. And why is France getting the business? Why isn't Russia selling more wheat at this point? And I think the market checked itself, and I think those technicals helped it do that.
I want to talk to you about the soy complex. You mentioned earlier when we looked at some of the technical descriptions and thinking about that in terms of this soy trade. And I know a lot of farmers concerned about soy prices, even though we saw a bit of a futures rally. I know cash basis in many areas is very much struggling. You're hearing calls from the American Soybean Association this week to, figure out things with China. When you look at the technicals here in soybeans and starting with the weekly chart, what are you going to be tracking closely here through the end of the month, Mike?
This is just a great setup for a possible hedge if we don't perform this week. Again, I'd reiterate the idea. Can we keep with last year in August, see a bean low, and then see wheat and corn follow a week or two later like last year? And so what we've done is before the report, before the August, or excuse me, right after the report, before the August futures went off the board, lead month beans were able to get to 1025 and a half. Earlier this week, we got to 1025 and a quarter, 1025 and a half again, and we've been able to take out last week's highs, but not get above it. So that is a check of last week's highs, technically speaking. And right with last week's highs is the 26-week moving average in the yellow line, and then the downtrend dotted or hash line that is a longer-term downtrend that goes all the way back to the middle of 2024 as far as a resistance. The stochastics on this chart, the white and purple lines, they're showing a buy signal because of that crossover. If you ask me, Jesse, beans are still in the driver's seat short term. They need to perform here. And if the wheat can join them, then all of a sudden we can maybe see something similar to 2024. What's that mean in its totality? We don't have to make nasty sales at low levels off the combine hedges on corn and what we cannot store on corn, and we can move a lot more beans at maybe possibly a lot higher value level and a more profitable level.
How about in November beans specifically, as you look at the daily chart and noticing, it looks to me maybe a few wedge formations possibly happening here. You're the technical analyst. You tell us what you see it here, Mike.
You take over. You're exactly right, in my opinion. You've got in the purple rectangle, you've got that bull flag or pennant. We're not sure if it's a flag or if it's a pennant yet. It is showing lower highs and higher lows, and so that would make it probably more like a pennant as opposed to a flag that is more of a continuation and a range. But you see the flag pull and those big moves up late last week and earlier this week as well, a little bit more sideways trade. But if you would measure that flag pull move from essentially 970 area, 965 975 area up to the 1040, 1045 area. If you could break above the 1046 area, 1050 area, then you could open yourself up, I think, to the ultimate swing objective, which would be the June high of around 1075. This is the level that I really want to get some business done for clients. But again, I'll reiterate this, that just like the weekly chart, Jesse, you do not, in the case of this November chart, want to go below the 1026 and 3/4 low that we put in 4 days ago. That essentially destroys the technical look of this bullish flag or bullish pennant. So 1025 and a half on the weekly chart, 1026 or so on the Nov chart. Notice how those two come together so nicely. It's one of those few time periods where the technicals really make a lot of sense. So I'm relying heavily, obviously, if you can't tell it by now, on the technicals for the soybeans and to a lesser degree on the wheat. And then we'll see if the funds can cover shorts on the corn and do more of a job with the momentum movement.
And again, it comes back to what we looked at earlier. And just sometimes, Mike, that technical analysis is really key to look at, or a lot of times I would say it's key to look at that.
It is. You've got to be in the business a while, I think, to make it work for you. But the key right now, and I'll hit it a third time just so everybody is clear on it. The key right now, Jesse, is we've had negative information come through this market last week with the USDA report. And quite honestly, I'd call the Pro Farmer Tour data so far pretty negative. We've got record pod counts. We've got big yield potential. Like what they say, Indiana's at like a 22-year high, or one of the states is at a massive high potential on corn yield. But the trade knows that this is the month that we make the yield, and the tour is also supporting that idea. And that's how we kind of closed out the week last week when we saw those whopper numbers from USDA.
And I do want to get to this. I didn't even pull up the Fed tool chart that you had as well. We got a big Jackson Hole Fed symposium happening this week, Mike.
Yeah, and the minutes came out earlier on Wednesday, right before we started. And it looks like to me the trade has dialed in a big rate cut, a quarter-point rate cut, 92% likelihood during this time period. And that One right there, I think, was a week ago. It's now down to about 85% in real time since the Fed minutes came out. I wouldn't be surprised to see the dollar to become a little bit more of a headwind against us, because the policy notes were such that they are much more in agreement about not cutting the rates as aggressively. So we'll see how the Fed market does, the futures with the bonds do, and whether that it firms the dollar up is what I'm kind of looking for. But we do need to say also, in the midst of all this with the Fed in Jackson Hole, is do we get peace in Ukraine or not? And does that mean, if not, we see the crude oil and the wheat market jump? Because some traders and some analysts like me feel like we've priced in a peace deal for the most part when it comes to wheat and when it comes to crude oil. What if it doesn't happen? Does that mean wheat and crude oil take off? So we'll watch for that.
Great stuff as always. And I know folks want to reach out, take a look at your analysis and get a trial and much more. They can do that easily online, can't they, Mike?
Yeah, and this is not something you're going to pick up right away if you're not familiar with what you and I are talking about. So please go get a trial, because I'll be talking about these things for the 2-week trial period for sure at this stage of the game, because I do think they're important. So globalcommresearch.com. It's globalcomm with 2 M's, research.com.
Mike Zuzolo, Global Commodity Analytics. Always a pleasure. Thanks for joining us on Market Talk this week.
Great to be with you, Jesse, and look forward to seeing you in person at Farm Progress next week.
Yeah, it's right around the corner. Looking forward to being there in Decatur, Illinois. Farm Progress show will be with Beck's Hybrids, as well as with Gearinghoff Tuesday and Wednesday for Market Talk episodes. So looking forward to that. Mike, we will see you there in Illinois.
On Tuesday. You got it, sir.
Sounds great. Mike Zuzolo, Global Commodity Analytics, joining us here today on Market Talk.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.